Well, look, I would just like to say that both Ramelius and Spartan are industry-leading examples of what highly experienced, disciplined, and perhaps understated leadership teams can deliver in terms of shareholder value from unloved and underperforming gold mines and gold projects. So I think everyone here would agree with me that those guys should be very proud of their achievements to date. Anyway, I know that we were the main draw card for the session this morning, so with no further delays, we'll get on with it. Standard disclaimer. Antipa acknowledges the traditional custodians of country throughout Australia. Antipa's market cap is around $50 million and we have almost $8 million in cash. Note the strong strategic 37% cornerstone to our register, which includes major shareholders Newmont at about 8.6%, Lion Selection Group at 4.3%, and other institutions and funds at approximately 18.4%. With an EV of around $20 per gold resource ounce, Antipa represents significant leverage for investors in this bull gold market to four factors: a possible gold development project, gold resource growth, discovery potential, and also M&A possibilities. During this presentation, I'll provide some colour on all four of those investment levers. Antipa's massive portfolio covers 5,100 square kilometres of Western Australia, and over the last 7 years, the Paterson Province's endowment has grown by a staggering 20 million ounces of gold, 3.4 million tonnes of copper, and 54 million ounces of silver. And that's been a result of discoveries undercover, including Greatland Gold's Havieron deposit, Rio Tinto's Winu deposit, and Antipa's Calibre and Minyari deposits. Due to these discoveries, the province boasts 3 large-scale potential gold, copper, silver development projects, including Antipa's Minyari Dome asset. Antipa's value is underpinned by a significant and expanding mineral resource base of 2.6 million ounces of gold, 116,000 tonnes of copper, and 1.2 million ounces of silver. Antipa has a first mover advantage in this province, pulling this belt scale ground package together prior to these recent Tier 1 discoveries. This has provided Antipa with a commanding and strategic stronghold with our 170 kilometre long, shallowly covered contiguous package connecting Telfer to Winu. Newmont is putting Telfer and its 70% share of the 7 million ounce Havieron deposit up for sale, whilst Rio is looking for a partner to develop Winu. So an M&A consolidation light will be shone on both the province and potentially Antipa. Our Minyari Dome 2022 scoping study identified the potential for a significant standalone gold development opportunity, which also happens to be located within trucking distance of Telfer. Our 100% owned project has a gold resource of 1.8 million ounces and a mining inventory of 1.1 million ounces at 1.6 grams per tonne gold. This study delivered a significant series of economic credentials using just a gold price of 2,430 Australian dollars per ounce, with a pre-tax NPV at 7% of $392 million at an internal rate of return of 34%, with payback on the $275 billion of CapEx at around 2.5 years. The project's initial processing life is 7+ years at a throughput of 3 million tonnes per annum and generating an impressive 168,000 ounces per annum for the first 5 years. This year, we've been advancing work streams designed to evaluate the upside drivers for our gold development opportunity, and this will culminate in a maiden resource for our Geo01 discovery later this month, to be followed by a scoping study update in September. And this study will have the ability to leverage off not only the potential open pit production from our Geo01 discovery, but also the very significant increase in the Australian dollar gold price. Minyari is strategically located just 35 kilometres from Newmont's Telfer 22 million tonne per annum processing facility, which by 2025, that's next year, will have huge spare capacity. Interestingly, our Minyari ore is metallurgically compatible with this facility and is capable of producing a Telfer-style high-grade gold copper concentrate. So we haven't ruled out third-party processing options. We're expecting that September's scoping study update will give Antipa the confidence to commence a pre-feasibility study later this year. And that will obviously put us on the path toward a mine development decision. As mentioned, that 2022 scoping study used a gold price of just 2,430 Aussie dollars per ounce, and a mere 10% increase in that gold price supercharges the project's economics. With extremely high gold price on the table, it would seem inevitable that Minyari will be developed in the near to medium term. Our 2024 drilling programs have been designed to significantly increase the scale of the Minyari development opportunity, as well as delivering greenfield discoveries via testing multiple targets close to our 1.5 million ounce Minyari deposit. Our recently completed 15,000 metre Phase 1 drilling program materially increased the substantial maiden resource opportunity at our Geo01 discovery, plus will add to the existing Minyari deposit resource. Both will enhance the project's open pit production potential and boost the economics of the Minyari Dome development opportunity. Gold mineralisation discovered at Geo01 across multiple lodes, as well as the Minyari extension discovery and GP01, all remain open in multiple directions, adding further to this existing significant maiden resource opportunity, which will be the focus of our upcoming Phase 2 drilling program and development appraisal-related work streams. Okay, Geo01, look, this discovery, which was from a soil program and air core, is only 1.3 kilometres from our 1.5 million ounce Minyari deposit. And drilling here at Geo01 has defined mineralisation under very shallow cover across a 700 metre by 500 metre footprint, with multiple 30 to 100 gram metre gold intersections, such as 35 metres at 3 grams per tonne, including 16 metres at 5.6, 50 metres at 2.3 grams per tonne, including 19 metres at 5 grams, and 48 metres at 1.7 grams per tonne, including 28 metres at 2.8 grams per tonne. Geo01's main zone of mineralisation has been defined along 500 metres of strike and up to 190 metres across strike, with mineralisation remaining open in multiple directions. New zones of high-grade mineralisation were also recently identified 250 metres and 400 metres from the main zone, with intersections from these new areas including 10 metres at 3.6 grams per tonne. So the Geo01 maiden resource will be, as I mentioned, coming out later this month. But wait, there's more. The stake knives. Antipa's Paterson Province portfolio delivers a significant exploration optionality, boasting 3 additional complementary large-scale gold copper projects with major partners Rio Tinto, Newmont and IGO, providing funding of up to $115 million. Our 1,500 square kilometre Wilkie farming project with Newmont comes to within a few kilometres of both Telfer and Havieron. Newmont need to spend $60 million to earn a 75% interest in this project, and Antipa currently still owns 100% of the asset. Late last year, a surface geochemical program identified a Telfer-sized, 3 kilometre long by 1.5 kilometre wide gold target known as Parklands, which is located just 10 kilometres from that processing facility. Parklands has a peak lag result of 1.5 grams per tonne gold and multiple results greater than 0.1 grams per tonne from surface sampling. The anomaly remains open in several directions. So with Telfer's 22 million tonne per annum facility rapidly running out of ore to process, a big open pitable discovery at Parklands nearby could be a game changer for all concerned. On one of our other projects, the 1,200 square kilometre Citadel joint venture project with Rio Tinto, it's located within just 4 kilometres of Rio's Winu deposit, where they plan to build a gold, copper, silver processing facility. On the Citadel project, the Calibre deposit, which Antipa discovered, the resource currently stands at 2.1 million ounces of gold, 104,000 tonnes of copper, and 1.3 million ounces of silver. Calibre represents a potential Winu satellite development opportunity, or potentially a standalone development opportunity. Antipa owns 32% of this joint venture project with Rio. Our 1,200 square, not sure what happened there, that's doubled down. Over the coming months, just to wrap it up, the key news flow for investors will come from our 100% owned Minyari Dome project. And as we advance towards that pre-feasibility decision, investors can expect significant mineral resource growth and also the scoping study economics for the Minyari development opportunity to substantially improve. Boosting our 100% results will be significant news flow from those partnered projects, whilst in the background there will be an M&A buzz in the province, with Newmont about to commence that sale process for its Telfer and Havieron assets alongside Rio, who is evaluating strategic options for Winu. Transactions by these majors could act as a catalyst for regional consolidation, noting that between Newmont, Rio, Greatland and Antipa, there is roughly 20 million ounces of gold and 3.4 million tonnes of copper in a ready-to-develop state. This could potentially provide a once-in-a-generation company-making play. That huge Telfer plant runs out of ore soon, and Havieron uses less than 25% of Telfer's processing capacity, so that it's an imperative that the new owner of Telfer secures additional ore feed. Keeping in mind that Antipa's Minyari development opportunity is close to Telfer, and that Antipa also has a tight grip on 5,000 square kilometres of adjacent exploration ground. But for us, it's business as usual. Our main objective this year is to maximise the company's value with a focus on resource growth, discovery and development potential. Look, that's the story. Thanks everyone for your time. I know it's pretty tough first thing in the morning on the last day, but if you'd like to know more, there's a couple of hours of booth time available, and we're at booth 122.